Good morning. My name is Anthony Hamilton. I am the CEO of Georgina Energy, listed on the London Stock Exchange. Before we start the presentation, I would just like to confirm to all of our shareholders who have reached out to the company that we are aware of the speculation presently in the marketplace. It is something that we will address over time, but very simply, it's fiction rather than fact. And in our case, we will deliver factual evidence that will resolve all of these issues. So please rest assured when I say that shareholder value is very important to us. We have a very careful and considered plan, and we will deliver on that. More importantly, every fact that the company has in the marketplace is supported by both its prospectus and the CPR and the title opinions and all of the documentation that was approved by the FCA and the LSEG in a fairly lengthy admission process that we went through. So again, please bear with us. We, as I said, we are aware of it and we will address it by the actions of the company. Next slide, thank you. Next one. Georgina Energy has been 5 years in the making. It is a consequence of a successful LSEG RTO on the standard list of mining minerals and metals in July of this year. We hold two projects, one in Western Australia, EP 513 Hussar, and one in the Northern Territory, EPA 155 Mount Winter. Volumes are very significant in situ. These are based on the CPR, and what has made us somewhat different from what I would call greenfields exploration is that we are looking to re-enter existing wells drilled in the 1980s that were 100% successfully drilled for oil. In the case of the wells, there are gas flows. In the case of Hussar, there were gas shows at 1,000 metres, there were gas shows at 1,900 metres. So we have established infrastructure, we have accessible markets, and we have government incentives. We also have the timing, which of course, in view of the fact that it took us 5 years to get to market, the helium and hydrogen demand, in particular the helium demand, is scaled. In terms of our scalable resource, it's 2U or P50 prospective combined resources of 303 BCFG helium, 308 BCFG hydrogen, 2.97 TCFG of gaseous hydrocarbons. We do have the benefit of the fact that that's come before us, of course, is Helix, Helium-1, and Pulsar Helium. So helium is very much in the focus of the investor community, and we have a highly experienced team. A team, as I said, that has spent the past 5 years developing the Georgina project profile. Next slide, please. For those of you that have an interest, this is essentially just a comparative. It's based on the relative CPRs for each of the entities. In the case of Georgina, you'll see our unrisked 2U P50 is 303, Helium-1 is 212, Helix is 2.3. In the case of hydrogen, again, 2U P50, it's 308, 0 for both of the other two at this stage. And then natural gas, 2.97 TCF, and again, 0 at this stage. Seismically defined targets, well, we have two. I believe Helium-1 have one. and Helix I'm unaware of at this stage. We classify ourselves as a well redevelopment company. So we are re-entering known wells drilled, which stopped short of penetrating the Heavy Tree or the Townsend Formation. We have access to road, rail and pipeline, third-party processing plants. We have a federal government spending close to $110 billion on a pipeline, and we're in a low-risk jurisdiction. Similarly, Helix, same thing, low-risk jurisdiction. In terms of market cap, we came to market at around £11 million, including $5 million in cash. Next slide, please. As I said, our board is highly experienced. Every one of our board members comes with a very specific skill. In the case of John Hugh, our technical director, over 50 years of extensive experience in the oil and gas industry. He was, in fact, the founding director of Central Petroleum. Peter Bradley, our non-executive chairman, is a practicing corporate lawyer, over 35 years in the City of London. Robin Fryer, financial consultant, again, highly experienced. We have Bob Liddell, who's also one of the, although not a director, he's a key element to our organisation in that he is our native title or Indigenous Affairs consultant. He has over 50 years of experience. Bob is actually an Aboriginal elder and has worked for pretty much everybody and anybody in Australia, and in fact even worked for the US government. We then have Roy Pitchford, who also has an extensive public company background and was originally the chairman of Triple M, and Mark Wallace, our finance director, who holds a significant financial accounting background in both Australia and the UK and the US. Next slide. The key for us has always been the development of the assets, and primary to that was to obtain the listing. Once we obtained the listing, we then had the available funding. So you know that on the 20th of August, we signed a contract with Aztec Well Construction. The purpose of that is for the re-entry of Hussar, EP 513. Now, the drilling permits, the environmental and all the other clearances that we required are now underway. So for those of you that understand, we are lodging an environmental assessment. We've got an application for operator. We've done our native title access agreements. We're doing an environmental impact study. We have also in the process of submitting our drilling and program plans to DEMIRS, which is the regulator, who will grant the drilling permit. The drilling permit itself is a process. So as long as we meet all of the requirements that I've just stated, we will be granted a drilling permit. Second to that is that we are processing additional seismic and our completed AEM PTP survey. One of the things that the company was in the position of and put in its announcement of the 8th of August is that we have been able to access additional seismic, which is reprocessed from 2002, because bear in mind, these wells were drilled in the 1980s. Our simple plan is to deepen Hussar 513. That is our primary focus. We hold a 100% interest in that licence. It is granted to us in October 23. We hold it for 6 years as an exploration permit and for 2 further 6-year terms in the event. However, if we reach production, the licence converts to a production licence and it's in perpetuity until such time as the well is no longer economically viable. We have existing roads and rail. We have existing drill pad locations. We also have a refinery in Darwin, some 1,300 kilometres away. It's accessible by road. We've completed a salt cavern storage. We've completed an offtake agreement, which is currently being extended. And as I said in our 8th of August announcement, we are in the process of completing the execution of an extension to that agreement, which will include the reimbursement of our sunk costs for the development of the assets. Next slide, please. Our commercialisation strategy, as I said, it has been 5 years in the making. And as for those of you that don't know, helium and hydrogen, when it comes up with natural gas, requires a separation plant. You have the refinery in Darwin. The main thing that we decided was we needed to arrange an offtake agreement with an entity that could mitigate the significant costs of infrastructure. And the thinking behind that was very simple. In the event that we have a significant discovery, as we are hopeful of, then the costs of building a plant on site above ground to refine that are so cost prohibitive for a junior company that rather than do that, we would rather sell the gas at the wellhead. The beauty of that is that the obligations for us as the producer then basically come down to supplying the gas, as I said, at the wellhead. We've done a salt cavern study, which that information we've made available. Now, the off-taker can do that, or we as a company can create the salt cavern storage capacity, which would then allow us to store significant amounts of raw gas back in the ground. The beauty of this whole process is that it allows us the opportunities to make decisions while not placing ourselves in the position of being financially impeded by the significant cost of having to put the infrastructure above ground. Next slide. The re-entry program, the diagrams make it look reasonably simple. It is, in fact, a tried and tested method that is done all around the world. In this case, Hussar has an 8 5/8 of an inch casing. Yes, it's been in the ground for 40 odd years, but the plan is that it has an inspection plate on top, welded on top. And our plan will be essentially to clear, re-enter, clean out. If we need to, we would re-sleeve or put a new casing down, re-enter the hole and extend the depth of the well. In the event that that presented a problem, then of course we would follow the second slide, which is a sidetrack. Next slide, please. The locations of both of the assets are essentially Central Australia, or what they call the Central Super Basin. In the case of EP 513, as I said, we hold it under a 100% wholly owned licence. It sits on the Officer Basin. The Officer Basin has what they call the Townsend Formation. And this essentially replicates what they call in the Amadeus Basin, the Heavy Tree Formation. And it is what traps or contains the helium, hydrogen and natural gas. In the case of EP 155, EPA 155, that's actually been under application since 2008. And we signed an agreement in 2020 to acquire that and have the right to farm in on it. It was a very, very modest deal. We obviously, because of the significant elapse of time between when it was applied for and the ongoing in-purpose application, we only paid essentially $15,000 on signing, $15,000 on seismic processing. We are in the process of attending a meeting on the 11th of September in the Northern Territory at Alice Springs, whereby we are seeking to get the Indigenous community to grant us the right to convert it to a full application, at which time the EP will become an exploration permit and will move from its application status to a full EP. Next slide. Hussar, as I said, is relatively straightforward. We've held this, original application was in 2019. We hold 100% interest in it. It was drilled in 1982 to 2,040 metres. Our intention is to drill it out to 3,400. As I said, gas was encountered at different levels down the hole, I believe at 1,185 metres, at 1,900 metres. One of the key elements to this is, though, that it was being drilled for oil. So as a consequence, the Townsend Formation, or subsalt, was not penetrated. And that is where the consultants and our technical team over the past 5 years have determined is the likely focus for helium and hydrogen and natural gas potential. It is interesting to note that independent consultants, and in this case, he has over 30 years of active experience, both he's a geophysicist and a geologist in the energy and natural hydrocarbon industry, that the Officer Basin represents a significant potential for helium, hydrogen and natural gas. On top of that, as part of our program, we did fly a AEM PTP survey, 3,500 square kilometres. And as I said, that's currently being resynthesised as per our announcement on the 8th of August with the identification of a very significant gas anomaly. We do also have our land access agreements. They are executed. And again, as part of the permit process, we are required to submit our plans to them, which we have done so. And all of those will move towards the granting of our drilling permit by DEMAs later on this year. Next slide. Mount Winter, as I said, held by Oilco, been under application since 2008. Georgina, or Westmarket Oil and Gas, is the farm-in operator, and we have taken over the full operatorship of that. Our plan is that obviously we've managed to secure the meeting in the Northern Territory on the 11th of September. The plan is that the Indigenous consultant, along with our representatives, will make representation to the Indigenous community, in which they, I believe, will be asked to grant permission. Once they do that, we will then formally seek application and conversion from an EPA to an EP, and that will then be done by the government, and they will grant the permit accordingly, at which point we will then initiate our complete seismic program, and we will take over the complete running and development of that, with the ultimate aim of re-entering and developing the helium and hydrogen natural gas potential. Again, in the case of Mount Winter, it was drilled to a relatively 2,650 metres. It actually did touch on just before the heavy tree formation and entered in the salt. What I can tell you is that in the heavy tree formation, the wells that have penetrated it have encountered 9% helium and 11% hydrogen. And that was done by tier one oil and gas companies. So we have a high degree of confidence in the outcome of the development of Mount Winter, which will be our second target following completion at Hussar. Next slide. In terms of everything that we've done, and as I said, this is a 5-year in the making exercise, the schematic probably provides the best way of viewing what we're all about. And essentially, the original well stopped short. The plan is to penetrate the salt into the gas deposit, which has the helium, hydrogen and natural gas reservoirs. The potential for both of them, EP 155 and EP 513, are that they do contain the required elements to yield significant helium and hydrogen accumulations. This is something that the company has spent a lot of time analysing the historical data, be it the well logs, be it the seismic, or be it 40 years old, the well completion reports, the daily logs, the wire lines, everything that was available, we have had access to. Next slide. We're located in Australia. So, as I said, we have 2 previously drilled sites, albeit for oil. We have gas pipelines. We have a gas pipeline servicing the East Coast. We have road and rail. We have ports. We have a refinery, of course, in Darwin, owned by Linde Group, which is currently under care and maintenance. It was originally processing helium from the Timor Sea, I believe. We have a fairly significant gas domestic market, which is undersupplied because a large proportion of Australia's gas is shipped overseas via LNG. You also have an extremely proactive government, and you have a $110 billion infrastructure plan that is being spent. Next slide, please. The global outlook. Well, the helium market continues to escalate. The global supply continues to create significant issues with demand, whether it's space launch, whether it's semiconductors, whether it's cooling for nuclear reactors, hyperdrive engines. The fact is that NASA signed a contract for 1.2 BCF of helium at $920 per MCF in 2022. The US Bureau of Land Management, which originally was the mechanism for which the prices were set, held its last auction in 2018, and that sale price was around $280 per MCF. In recent years, we've seen the price surge to over $600. And right now, there's no major new sources, even with all the exploration going on. And the manufacturing of synthetic helium is currently not possible. So exploration is the answer. Next slide. I call this our hidden benefit, and that is we have the benefit of hydrogen. Now, hydrogen is slowly but surely gathering pace, particularly as we move through to the decarbonisation. There's a big push towards hydrogen fuel cells, hydrogen power generation. Almost 99% of hydrogen historically has been produced by fossil fuels. And that at the moment is an inescapable fact. The problem is being that right now, artificially manufactured hydrogen still has cost prohibitive costs associated with it, and that it requires significant amounts of energy to produce. On top of that, you've got a National Gas and Infrastructure Plan in 2021, which said that it was a priority infrastructure development. So there's a significant amount going on. And I think certainly, as you see from that graph, by about 2030, it really starts to take off and escalate. So from our perspective, hydrogen, if you like, is a byproduct, but one that could have significant financial impacts for the company. Next slide. Mark.
Good afternoon, everybody. My name is Mark Wallace. I am the CFO of Georgina Energy. Just to give you some background to Georgina Energy, when we first established the company in 2019, and when I say we, it was Tony and I, what we did was we specifically set it up as a PLC company that basically was audited twice a year and in accordance with international financial reporting standards. Now, the reason why we did that was obviously for transparency and a rigorous accounting standards that we adhered to. But when we actually raised equity, we raised equity in Singapore. And that in itself gave our Singaporean investors a lot of comfort, knowing full well that not only was the international accounting standards being adhered to, but there was full transparency in how they were being reflected in the financial statements. So we originally raised £2.5 million from the Singapore investors, who were high net worths and family offices. And Tony and I also put in, invested £2.5 million. We also raised approximately £1 million from note holders. So in terms of the accounting standards that we adhered to, we needed to be very transparent, simply because we had stakeholders in, obviously, equity and also in debt. Now, when we raised the £5 million, what we wanted to do with that money is to spend the majority of it in the ground. So nearly every penny that we have raised is going towards the growth of the company. So in terms of Hussar, our first target, we will be spending £2.6 million to drill that well. And then we also have obligations in accordance with our farming agreement with Mosman to spend approximately £500,000 in Mount Winter, or EPA 155. Next slide. Thank you. So in terms of the investment that we actually went into the company, Westmarket, which is Tony and my holding company, half of our investment is locked up for 12 months, and then the other half is locked in for 24 months. We also came to an agreement with the cornerstone investors who wish to see the executive directors and management, their interests to be aligned with the investors' interests. And in doing so, we set up milestone performance shares. So in terms of the first milestone, we expect to increase our mineral resource estimates by more than 10%, and milestone shares will be provided to the executive directors. The second tranche of milestone performance shares will be for the drilling at Hussar, and then the third milestone will be for the drilling at Mount Winter. In terms of our model, we have a very low capital commitment due to the fact that the roads and drill pads already exist on site. And as Tony has said, in terms of this operation, it's an engineering project, so it's not exploration. So, as I said before, in terms of any funds being spent, the funds are going towards the growth of the company. In terms of all the modelling, the project financial modelling that we have undertaken for Hussar and Mount Winter, what we did was we were very conservative in the way we modeled the future cash flows. The helium used to be back in 2018. It was auctioned at Amarillo, Texas, by the Bureau of Land Management in the US, whereby the auction price would be the benchmark for the prior year. So on the 31st of August 2018, the helium price was set at 28.8 cents a cubic foot. So in all our modeling, we have always used that last auctioned price to provide a certain amount of benchmarking and also some transparency with our reporting accountants and for the regulatory authorities who actually reviewed all of our modeling of cash flows. So at 28 cents a cubic foot, it's very low compared to the current price of 60 cents a cubic foot. Now, when we compare that to our cost of production, our cost of production is approximately 8 cents a cubic foot. So what that provides for the company is a lot of free cash flow going forwards when we are in production. Even if we have to take a discount to the off-taker, that still provides us with enough headroom based on the current and future helium price that it will provide enough free cash flow to eventually provide our investors with dividends. And that is the goal of this company, to grow the company, to be a world-class helium, hydrogen producer, and to provide our investors with an excellent return on their investment. And in terms of any offtake, we do expect to provide the market fairly shortly on a further update regarding offtake. I can't go into any specifics, but we are moving forwards with agreeing a further advancement in our MOU with our potential off-taker. Next slide.
Thanks, Mark. So in conclusion, I think what is very important for everybody to understand is that Georgina has been 5 years in the making. It's been an extremely considered process. The assets, in the case of Hussar and Mount Winter, both sit within the Central Super Basin of Australia, one on the Officer Basin, which has the Townsend Formation, subsalt formation, the other, which is the Heavy Tree Formation or subsalt. And the facts are that these essential elements, along with the fact that they are seismically defined targets, that they were previously drilled, be it for oil, they have provided us with an opportunity to re-enter the wells. And as such, it means that our costs of entry are significantly less, but it also means that from the point of view of the targets, that we literally can walk to the wellhead and kick it. It's there. And the information pertaining to it, albeit 40 years old, is there. In terms of infrastructure, Australia may be a big country, but it has established infrastructure, a reliable supply chain. We can literally drive to site. We've got an airstrip at the sites. In fact, as per our announcement in August, we are currently re-preparing the airstrip the pad itself, there's a water well, there's water supply. Everything we need is already there. In terms of the market, well, the market dynamics are very, very good at the moment for helium, and they're on the growth curve for hydrogen. And I expect hydrogen to take an even more dynamic position globally over the coming years. The key to all of this was getting listed and raising the £5 million, as Mark said. And that £5 million was the cornerstone to being able to move forward and seek to essentially achieve our ambition. And our ambition is, I'll make no apologies, is to become one of the top 4 global producers of helium and hydrogen. So again, I really would like to thank all of our shareholders for their ongoing support. Please rest assured and know that your board, the management, the consultants, the technicians, everybody is committed to making this story work. And we are committed to the point that I look forward, as I said on many of my previous interviews and presentations, there are more announcements to follow. I mean, we were only listed for 8 days and our first announcement came out, followed by our second. We have already managed to obtain a meeting with the CLC for EPA 155. We have a high expectation of a positive outcome. I am confident we will get our drill permit for Hussar. We are simply following all of the required elements of that to complete that. The technicians, the geologists, the geophysicists, the drillers, every single person that is involved in this operation is highly experienced and committed to a successful outcome. Next slide. Basically, thank you very much for listening to Mark and I. And again, as I said, I hope that we've provided some insight into Georgina and what we're about. Thank you very much.
Thank you.